Intel. Good day, fellow investors. A lot to discuss here: earnings, outlook, risk and reward, dividend sustainability, and also a little bit of fraud when it comes to Intel these days. Let's start. If you don't know, Intel is part of our YouTube portfolio where we try to learn on companies and how to best nail the better risk and reward situations. And Intel is described as semiconductor cycle investment. So we are watching the cycle there. And if you want to read more about Intel, you can check it on my research platform, the written report. It is on free preview, so feel free to check that in the link in the description below if you prefer reading. So what happened? What happened with Intel? What is going on with the stock? Well, since the new CEO came in on February 2021, Intel stock didn't do well and is down more than 50%. Now, before Pat came here, the CEO, the previous CEO was Bob Swan, and he was called a bean counter because he was just looking at cash flows, buybacks, and that also made Intel a value investment here in the 40s, the 50s. The P ratio was low, but now the new CEO was hired for growth, and we see this. There are two versions to this story. One is that Bob Swan is the culprit for this because he was just looking at cash flows, not investing, focused on temporary profits, and that was not sustainable because everyone was taking out the cake of Intel. Now Pat came and he is focused on investments, and this is the result, likely it is, of low investments or bad investments here. So it's not really his fault yet, but the situation is ugly. From valuation, what is important to keep in mind: market cap 116 billion, and the dividend for now is still there. So let's look at the earnings that have been disastrous. If we look at the financial highlights, the revenue was down 28% over the quarter, gross margins were destroyed, and earnings per share, there aren't anymore. So every business of Intel has been destroyed, revenues down, operating income down, from the PCs to the data centers, everything has simply been destroyed. And to add insult to injury, revenue down 40% expected in the next quarter, margins even lower, and going for earnings losses, inclusive the fraud we'll discuss in a moment. I always like to write notes on those conference calls. They say macro headwinds are the issues according to the CEO. Near-term market weakness for the PC, server market to decline even further in 2023 and then recover. Will that happen? I don't trust the management anymore. We will see. They will focus on cost savings, and they say they are on track to regain transistor performance and power performance leadership in the next 2 years. There was a lot of talk about tech, but as we see above, it doesn't really matter. What matters is the market, and the market doesn't like it. And they say that the new foundry model should lead to 8 to 10 billion in savings exiting 2025, thus 2026. Now the outlook short term is terrible, but let's compare a little bit the outlooks from last year, or not even last year, 11 months ago, with the reality now. So they have been discussing how they will deliver on 5 nodes in 4 years, process performance parity in 2 years, and unquestioned leadership again in 2025. Some believe it, some don't believe it. That should then increase revenues, increase gross margins. But this was a great question from an analyst. The question was about how are those margins that were extremely high, 60%, 46%, and now those will be 39% if they nail the guidance, how are they going to return? The answer is it is a bet on higher revenues. And they say, I think clearly revenue is going to be the most significant driver of gross margins. On the dividend question, we announced the dividend for the first quarter, consistent with last quarter's dividend, and then we take a very disciplined approach, blah, 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 and we are committed to maintaining a competitive dividend. Not this level of dividend, not growing dividend, a competitive dividend. This means that they might change the dividend if necessary in the coming quarter, which will, as ever, be a big hit for Intel. And exactly on that guidance, Intel's guidance, the projections, is where the risk and reward lies. So their strategy, they want to win now in everything they do. The market, they say the market is great, 300 billion, they want a big share of that. Their beliefs are they are in an era of sustained and long-term demand. There is a $1 trillion market opportunity with all the digitalization, and their plan is to focus on reshoring, so from China back to the United States and Europe, and therefore they are the only player who can, Taiwan, Japan, South Korea, China, who can compete with that, and they're going to do that by delivering leadership products across all of their business. In 4 years, they should be beating everyone out there. But of course, some people are skeptical because they are saying they will, at scale manufacturing, save 8 to 10 billion, new investments in Europe, etc. And this was from the presentation just 11 months ago, how Intel is the great growth story, the next great growth story. They said they will grow mid to high single digit in 2023, 2022, and that didn't really happen. Look at their projections. So slower growth now, but 10 to 12% growth later, a lot of profitability. So these were the projections, and then again, gross margins around 51% now, higher even in the future. And here is the reality. Revenue guidance is down 40%, that's not growth. Margins 39%, even if they said they would be stable here. If we look at the 2022 outlook from February 2022, compare it to reality, you can see the absolute destruction there that has happened. And we can now just dream of the projected free cash flow of 20% on great growth, high margins expected in 2026. And this is the problem now. 50 billion in revenue based on Q1 guidance, no profits, and will it be 60 billion in revenue and some profits? That's huge for valuation. Plus, 2022 projected growth till 2026, was that from the 2021 level or from the 2023 new base? And this is my question. Should I take 50 billion as Intel's revenues for that 10-12% growth in 2026, or I have to take 75 billion in revenue? That was the case 12 months ago. Those are huge questions, and only time will give us the answers. You have seen on the guidance how it was totally wrong, and will they reach product leadership in 3 years when their guidance was destroyed by the market? That's the big question. That's the first big question. Can we trust the management? Are we sure that they will reach product leadership or not? Some say yes, some say no. And this is a great comment from Nathan here, really summarizing well whether this will be the case. AMD will announce earnings on Tuesday in 2 hours as I'm filming this. Let me know in the comments and I'll check that too, what's going to happen there. But I also thought extending the useful life from 5 to 8 years is shameful accounting, and we'll discuss that in a second. And with that accounting change that I consider fraud, the big question here is the management lying or not? Is it fraudulent or not? And when you look at the accountability of the management, Just look at the owners of Intel, all index funds, passive investments. So the management is accounting to nobody, because they don't care about the investments. They are invested in everything. So that's a key question. And this now is what I consider accounting fraud, even if it is legal, but for me it's defrauding investors. So the following is just an accounting change that will temporarily increase the profits or lower the losses, but it's nothing more than accounting, and given the performance discussed above, it should be brought down to 3 years, not increased to 8. That's Sven's opinion. And look at what they said in the conference call. The accounting change that will impact our results beginning in the first quarter, January 2023, we increased the estimated useful life of certain production machinery and equipment from 5 to 8 years. From 5 to 8 years. This change better reflects the demonstrated economic value of machinery, blah, 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 blah. And the numbers will improve profits by 4 billion in accounting. So 4.2 billion better in net losses. They are guiding for 40% decline in revenues, but their machineries are now worth more. Their machinery should be worth less, impaired, if you're not making any profits on those revenues. For me, that is pure accounting manipulation, where the CFO just suddenly got an idea how to invent 4 billion, because without this, Intel's profits next year would be minus 4 billion. Now, if there will be zero, oh, it's not that bad. Intel is still profitable. This is pure accounting manipulation, and therefore a big red flag when it comes also to trusting Intel and their projected leadership. And the investing changes are: the base revenue isn't 75 billion anymore, but 50 billion, and that leads to growth in the future. Okay, in the best case, we are not at 150, but at 130. This won't be 20%, maybe 10%. So 10 billion likely profits one day. That changes, because then the future 2026 profits are 10 billion. That's a P ratio of 10 in 4 years. That's not a great investment, and therefore we have to watch for the cyclicality, more bad times. We own it in our YouTube portfolio. We bought it at 27. As I'm filming this is 26, so nothing to change. We will stick to it, and if it gets into the teens, I have two strategies. It has to be extremely oversold to buy it. When there is the dividend cut, I will increase the position if it's extremely oversold. And the second strategy is Peter Lynch's strategy: wait for things to actually improve. We have discussed this in the most important video that I made on Peter Lynch. So what category of stock this is? Cyclical. Thus wait for the earnings to really start to improve. So let's say it goes down to 20, then it starts to improve to 30, and then you take advantage of the 30 to 50 investment. You don't buy it now and look it go lower over time. So this is in line with what discussed with Intel over the last 6 months. A lot has changed with Intel over the last 2 years. The risk and reward is there. Yes, maybe it is a generational opportunity, but I can't go with anything except for the accounting change, where they suddenly invent 4 billion to make numbers look good. And if they are doing that also with the products, then Intel is going to be very, very ugly as an investment over time. We're going to watch. That's what we are here for: learning, watching, and then we'll see over time. I don't own it personally, only in the demo accounts to follow the price, and then we'll see how it develops, whether it will at some point give us a very low risk, high reward investment opportunity. That's what we are watching for. Thanks for watching. I'll see you in the next video.